Hey, good morning, everyone. Brian Hoops here with Midwest Market Solutions. This is Market Insider TV. This is our opening commentary on Wednesday morning. It's June the 4th. Good morning, everyone. We hope your day is off to a good start. I'll be doing RFD TV this morning, Thursday morning, and Friday morning this week. We hope you have a good week of trade, and as always, we'd love to help you out with some markets and some strategies. Let's get into it this morning in here. It's a busy morning already. We have the dollar a little bit softer this morning. Nat gas and crude oil backing off as well. Stock market unchanged. We'll talk about why here in just a second. It was higher overnight. Gold, silver mixed. Corn seeing a nice rally, 5 to 5.5 cent gains there. In the soy complex, we're 5 to 6.75 cents better. Oil and meal higher, and then wheat is also firming up a little bit. About 4 higher. Chicago, Kansas City up 1.25 and a couple cent gains in Minneapolis spring wheat contracts. So this Minneapolis contract that is traded on the CME, starting to find a lot more volume. Not much open interest, but volume is really starting to pick up for it, and that's opposed to the Minneapolis Grain Exchange that's traded on the MIAC exchange. So, all right, let's start looking at our news here this morning, and make sure you follow us on Twitter, Midwest Markets, Brian Hoops. We'll try and give you the latest market information. You can find a list of all of our services at our website, MidwestMarketSolutions.com. Our Twitter feed, text message service, everything you need is located right there. So, stock market backing off its overnight highs. As May ADP was released this morning, we only saw 37,000 private sector jobs added in May. That's the lowest in more than 2 years. It was estimates were 114,000. And so we did not add very many jobs in the month of May, pulled the stock market off of its session highs here, but really hasn't changed the trend or taken us lower. So Mato Grosso, the biggest corn-producing state in Brazil, has seen corn prices fallen over 40% over the last 30 days. Now, this reflects a flood of supply hitting the market as basis levels have deteriorated sharply due to the bumper crop. And maybe the supply really hasn't hit the market yet, but it's going to, and the market is preparing for that. We're going to hear talk of 120,000 plus metric ton crop coming out of Safrinha this year, which will be a new all-time record. This is important for U.S. because you've seen July corn futures really drop off. And the question is why? Why have we taken such a hit with old crop corn? And I think the answer comes to back to what's happening in South America and Mato Grosso. There's going to be a flood of supply on the world marketplace. Market here in the U.S. anticipating a big slowdown in our exports, and we don't need to have that summer rally quite as strong if South American supplies are available. Now, that will not be true if we have adverse weather, but it is true when the weather is good like it has been here recently in the U.S. So yesterday, we talked about weather being good and putting pressure against our prices. We hit a double bottom on the charts. That's a potential double bottom for December corn at 434. With the values oversold already, a technical recovery is likely to develop, especially if weather starts to turn adverse. Now, it's been pretty decent through most of the Midwest this year. There's some areas that producers telling us are very dry, badly need a rain. Some of that comes out of central Missouri, which I think received a lot of rain overnight, so hopefully they did get some. And if we can get any type of bad adverse weather over the next 2 to 3 weeks, I think there's a good chance December corn heads back into that 455, 460 range, just on some potential adverse weather, as we saw a technical potential double bottom in place. ABARE projected the Australian wheat crop 30.6 million tons. That's down 10% from last year. You can see by these news that there's not a lot of big market moving news features this morning, kind of void of any news to talk about, and that's usually true on a Wednesday morning. This week's cattle facts show list 219,000 head. Cash calls are steady to higher once again. June option expiration is this Friday, the 6th. The first notice day is Monday, June the 9th. At this point, we certainly don't see any reason we would see any deliveries whatsoever against that June contract. Now, yesterday, we saw another outside day lower close for live cattle futures. October posted a potential double top on the charts, and rumors of a plant closing seem to weigh on values, although that's not fresh news. We've heard about this from many weeks now. There's maybe some new plants coming online. Maybe we're going to hear plants closing. But this was enough, apparently, to spook some of the fund traders, liquidate some long positions, and we expect limited downside risk, really, because of strong cash trades and the discount that the deferred contracts have, but can't discount if the funds want to get out, they're going to get out, and that's going to put pressure against these markets here. Have a great day, everyone. Good luck, good trading. As always, we hope to talk to you soon. This has been Brian Hoops for Midwest Markets.